I'm Cesar Delgado from Back Roads of Illinois podcast. Welcome to the show with us for this afternoon's Markets Close with Adam Johnson from New York City for Wall Street. Adam is a Wall Street broker for his own financial company, is Bull Eye's Brief Company in New York City.
Hi, Caesar. It's great to be with you. Thanks for having me. And New York City, I'm happy to tell you, is back in action. COVID is a thing of the past. The economy here is strong. Um, People are out and about. They're spending money, which is good for the economy and certainly good for the stock market. And I think everyone's ready to start getting into the holidays. My building already has a Christmas tree up. I know it's kind of early for that, but New York's doing well.
How are things in New York City for you?
Yeah, very good. I enjoy the city so much, and it's amazing how the city has come back from COVID. And I'll tell you, Caesar, I've lived in the city since college, and I was here for 9/11. I was here in the '08 housing crisis. I was here in COVID. And, at all these various times, people said, New York will never bounce back. It's doomed. And, I'm an optimist. That's not the way I look at the world. And I wish there were more optimists out there. I know you're an optimist. So we get along, you and I. And yeah, New York always bounces back.
True New Yorker.
Yes, I'm a true New Yorker.
Let's go ahead to talk about the markets in today's close bell. Could you tell to the audience about this?
Yes, I'd love to. Thanks, Caesar. So we've had an incredibly strong rally in the market now for 2 weeks. Today, we're giving a little bit back, but that's to be expected. Markets rallied depending upon which index, whether you want to talk about the NASDAQ or the S&P 500, et cetera. Markets rallied 7, 8, 9% in only about a week. And whenever you move that far, that fast, you're going to have a little bit of a break. It's like if you have, if you have 2 weeks worth of sunny days, I mean, at some point you're going to get a little rain, and so we're getting a little rain today, and that's okay. That's healthy, but I think the markets have finally turned the corner because inflation is a thing of the past. I think we've beaten inflation. It's not back to 2% yet, but it's 3.1. That's pretty good. And as inflation comes down, the Fed will stop raising rates, and that's very good for stocks.
How is in the stock price over in S&P 500?
So the S&P 500 right now is trading, I think, about 8 or 10% below where it ought to trade. And I'll tell you how I come up with that. If you put a PE ratio of 20 on earnings, annual earnings for the S&P of $240, it's 20 times 240 gets you to 4,800. And the S&P right now has been trading sort of 44 to 4,500. So I think it's 8 to 10% below the target. And in fact, I think my target could even prove low because, Caesar, for the first time in about a year, earnings have actually started going up again. For 3 quarters, earnings fell. And finally, in the third quarter, they started to turn. And we had earnings growth of about 2.5%. And if you look at the estimates going into the next 2 or 3 quarters, it looks like we're going to have even stronger growth than that. So I think you can get to $240 in earnings over the next year and maybe even higher. And so I feel very good about owning stocks, especially with the Fed off our back and with inflation finally getting back down where it belongs.
Edmund, you can take a look for this markets. Don't matter. S&P 500, and it's gold and silver. What is your opinion that we will have a recession?
I do not think that we will have a recession, Cesar, and I'll tell you why. A recession is defined as a contracting or falling economy for two back-to-back quarters. In the second quarter, not only was growth stronger than expected, it was actually 4.9%. That's not a recession. The average over 50 years has been 2.7% growth per quarter. And we were at 4.9 in the I said the second quarter, I meant the third quarter. We're at 4.9% in the third quarter. And the current estimate from the Atlanta Federal Reserve says that we're somewhere around 2 to 2.5. Now, 2 to 2.5 is less than it was in the third quarter, but still very strong and consistent with that long-term average. So it's hard for me to see how we get to a falling scenario when we have a rising scenario, especially given the fact that we have the most number of people ever making the most amount of money ever and spending the most amount of money ever. Employment is very strong. And as I mentioned, earnings is now starting to turn back up. So when you have the two E's of earnings and employment, and you have GDP growth, GDP in growth mode, I just don't see how we get to a recession, especially with the Fed done raising rates.
We are in the fourth quarter for right now, right after December. It's in first quarter.
Yes, that's right. And I think that the growth that we have seen in the third quarter and now in the fourth quarter will carry into the first quarter. And in fact, Cesar, I was just reading a report from the National Retail Federation that predicts we will have $966 billion worth of holiday sales this year. That's a new record. We've never spent, I mean, it's almost $1 trillion of spending for the holidays. That's incredible. You know, when you think about it, if GDP is, call it 25 trillion, the US economy 25 trillion, and we're going to spend $1 trillion on holiday sales, that's like 4% of GDP. That's really strong. So yeah, again, I feel good about the economy right now. I really do.
Geez, this will help to stop spending from Washington, D.C.
Well, I don't know. Those guys like to spend money. And the problem is, you know, they don't want to get reelected, and they get the more money that they spend, the higher the likelihood they get reelected. And this is an election year. So unfortunately, I think we're going to keep seeing a lot of spending from Washington. And the problem with that, Caesar, is, you know, it's money we don't have. We've got too much debt in this country. If you ask me whether there's one thing that concerns me, that's it. It's way too much debt at the government level.
Republicans and Democrats as well.
Yes, you're right. Republic, you know, it used to be that Democrats spent money, you know, they tax and spend, right? Remember, that was Ronald Reagan. He'd say, well, those tax and spend Democrats are a real problem. But what has started to happen is that, in particular during COVID, Republicans started spending money too. And then somewhere along the way, Republicans realized, oh, wow, this is really great. If we spend money, people love us. We'll get reelected. But the problem is now the only people who don't want to spend money in the government are the Freedom Caucus at the far side of the Republican Party. And they're the ones who booted out Kevin McCarthy, and they now look like the bad guys and the rebels and angry people. So I don't know how we're going to get back to somewhere in the middle where rational people are looking at budgets responsibly. I don't know. I don't know how we get there, Cesar. It's a mess. I'm glad that
Yes,
I work on
sir.
Wall Street now in Washington.
Finally, what is your advice to your customers who wants to put selling a stock in 401k?
Oh yeah. Well, 401k is Uncle Sam's gift to all of us because we can put 19,000, I think it's $19,500 maximum per year into an account pre-tax, and it just grows without paying any taxes. And then eventually you take the money out, and then you pay taxes. But it's as though the government gave you a loan for all those years. So yes, everyone should have a 401k. If you don't have it, that's okay because you can start it at any time. Put as much as you can into it and just let it grow and don't touch it because 40 or 50 years from now, that thing's going to be worth a lot of money, and that's your retirement. So yes, put money into 401k. And then if you ask me whether I like the market in general, obviously, yes, I do, because as I've just explained, the economy is strong, earnings are rebounding, and I don't see a recession. So those are all good reasons to be invested in stocks, and whether you're in a 401k or just a regular investment account, I'm very happy being long stocks right now.
Is there anything would you like to go to tell our listeners about the oil markets in New York?
Well, I was an oil trader for several years early in my career. I loved it. Oil is a fun commodity to trade because it matters to everybody, and it's something we can all understand and appreciate. What I will tell our listeners and viewers, Cesar, is that oil is a fascinating market because it has a self-correcting mechanism. It generally trades between 65 and 90 fix, even though certainly many people are trying. It's something that I think we all need to learn as much about as we can. And also, I would say reserve judgment. We keep picking up the newspapers and hearing people here in America protesting either for or against what's happening. And the fact is, we're Americans. This is not our war. And so I think for any one of us to have a super strong opinion is misplaced. But I think what we can do is educate ourselves on both sides and try to understand what's happening. And if there's some sort of right side to be on, and I think the right side is always freedom, then stand up for freedom. That's an American value we can all agree on.
Since biblical time.
Yes.